Hello guys, this is Cassie. So I just want to quickly break down something for you guys. When it comes to trading, people think that trading patterns are profitable. Yes, you can make money trading just patterns, but then again, it is more than just trading patterns. You understand? Yes, you might see something like this. You might see something like this, and what you buy, or you might see something like this, you sell, or something like this, you buy. You understand? These are patterns, these are chart patterns. It actually work, but if you actually want to make money constantly from the market, you have to trade each pattern you see in the market with a story in line with what this market is giving you, or what the market structure is giving you. Now last week there was something that happened. Let me quickly show you guys. Last week I saw a trade on step index, and the blue line was, I saw the trade. It was a very nice trade. I was trailing the trade, very beautiful trade. The blue line was what? Was my entry. The red line was my stop loss, was where my stop loss was supposed to be. And the ash line, this line, is where what? My um, take profit is meant to be. I saw the trade. Now, I saw this trade around Thursday, and from Monday to Thursday, I've not taken any trade. So I really wanted to be in a trade to make money. But I was like, this trade had one thing missing out. This trade had one thing missing out. And let me tell you guys, like I told you, it's more than a pattern. You can see the market gave me the same chart pattern I'm looking out for my entry. But then again, with this setup, I'm going to teach you guys something. Now we had this high, and we had this protected high that took away this high. We had this liquidity. Price pumped into it. You can see tapped into it, and what? Sold. Almost gave 1:2 RR. Yeah, it gave 1:2 RR, but didn't clear the TP. Reversed what? To take out this what? This place my Excel was supposed to be. And I didn't take the trade. I didn't share the trade with my students. And guess what? I knew that this thing was going to happen. It's not like I knew it was exactly that it was going to happen, but the probability of it happening was too high. You understand? Let me show you something. When I this is the group I drop. So this was okay. This was it. Just follow up. You can pause and read. This was when I dropped this, and I told them, just follow up. This setup right here was the only meaningful opportunity I saw on the market last week. This is happening on February 13th. That means last week. Guess what? I didn't take it because it still had one thing missing out for me. Do I regret it? No. It has done 1:1 RR. That was when I was showing them, and I'm not even bothered about it. But here is the thing. Yes, I was aware and knew when price got to my point of interest, but I still didn't take it because it had one thing missing out for me. Here in trading, things are not randomly done. The result, the money, the lifestyle are not just luck. They are made from constant repetition of the same thing that has worked over time. If you trade randomly and trade every setup you see in the market, you will wear out. And before you know it, you will blow your account. And even if you make money from the market, the tendency of you giving it back to the market is very high. I didn't take any trade this week, but I'm not bothered because I understand that some week market presents more opportunity, some week market presents less opportunity, and some no opportunity. Capital preservation is the key. Enjoy your weekend. Treat trading as a pure business and not just a random stuff that give you money. So you see, this is what happened when I always see people say, trading is sports betting wey wear suit, I laugh, because when it comes to trading, it is not just randomly done. It has a process, and if you don't follow that process, you'll be doomed. You understand? People see trading as quick rich get scheme. Trading is not a quick rich get scheme. Everything in life that requires um, um, that requires hard work to give you that result has a procedure. You understand? Now look at when I told them. I now told them, I reminded them, it is more than pattern. This is today. We don't just trade patterns here. You remember me telling you guys that this was the only trade I was expecting, but didn't take it because it had one thing missing out. So let me go and explain you guys why I didn't take this trade. You understand? Because I see people, some people, they do chat me up and be like, oh, Cassie, I saw this setup. I want to take it. And when you tell them that, see, do not take it, blah, 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 this is why this setup might not play out, they'll be like, oh, you don't want me to take a trade. No, it is not randomly done. And the market is very, very funny. The market has a way of what? Showing you multiple opportunities, giving you that mindset that you think that the more trades you take, the more money you make. That is not true. You understand? Now, let's see for ourselves. So for here, we had our lower low, lower high, lower low. We had our lower low, lower high, lower low, lower high, and lower low. Now, price came, tapped into here, which I was aware, and this was when he gave what? Price started what? Selling, dumping, got here and reversed. So what was the reason why this price reversed and didn't take the final profit? Come with me. So this is on the 4 hours time frame. So let's scale down to our what? Bias time frame to see what happened. So coming to the daily time frame, do you notice something on the daily time frame? Do you notice something on the daily time frame? This blue line was where the entry happened. This red line was where you are supposed to put your stop loss. But did you notice where the setup formed on the daily time frame? Now there are three things I want to point out for you that you should always look out for. Now, the first thing is, if you bring your Fibonacci retracement tool and what? Drag it from this what? Because the daily is what? Bearish. You can see that the daily, we had this high that was taken away by this high, and we had what? This guy. So we had two break to the downside. Now, if you bring your fib, point it here, and drag it from here to this point, you will notice that where this setup formed was what? At the discount zone. Where this setup formed was at the discount zone. You understand? Pure, the daily is bearish, and even the weekly is bearish. And we're going to scale down to the weekly so you understand. Let's scale down to the weekly so you understand. So look at the weekly time frame. You can see that the weekly is bearish. And price is coming from what? This fair value gap, which it tapped on. Can you see it? Price is coming from this weekly fair value gap, which it tapped on. Now coming to the monthly is actually what? Bearish. But then again, the monthly is at what? At the discount zone. That's cleared everything here. So we intend buyers to come in anytime soon. But that is what? When it has given us what? Reasons. So now let's scale down back. Let's go back to our daily. Now, since you're taking a trade from the 4 hours, the closest time frame you need to what? Pay attention to is what? The daily time frame. And this is what? The daily time frame. Now, our setup formed at the discount zone with your fee. You can see that our setup formed at the discount zone. And what do you do at the discount zone? You buy at the discount zone. You don't sell. You understand? So this is number one thing that made this setup not to play out. So for my students, that you remember what I taught you. If you had something like this, this is a break of structure here, and this is a break of structure. You you see your setup around here, you cannot take you don't want to take setups like you want price to at least buy up to what a premium zone at least to this level. You understand? And you use your Fibonacci retracement to measure this thing. So you want price because immediately this low is being taken away. What has happened? Sellers has lost momentum. Anytime soon, buyers are going to come up to push it here. So any setup you see here is a trap. You understand? Any setup you see here is a trap. So you want price to come up here, and that was what happened. That was one of the things that made this trade not play out. If not, this trade would have played out. But you see where it formed. Marking from your fib retracement, we needed price to come up. That is number one. Number two, why this setup didn't play out to final take profit was the fact that we had an imbalance here, which price needed to fill up. You can see there was an imbalance here. Look at, let me show you. Let me mark it out. I'm actually using my phone to do this. Okay, why is it not saving? Let's try. I don't know why is it. Okay. So we had what? An imbalance here. You can see it. Which price has now come to what? Let me remove the blue line so you guys can see what I'm trying on this one. So we had what? We had what? An imbalance here. Which price what? Just filled up now. So this is another reason why what? Price couldn't take away the take profits here. You understand? Now, you can see that price has tapped on it, and there's a tendency of price to what? To start selling from here. You can see that's still giving what? Sells signals. Now, another reason why I feel like this trade didn't play out was because if you take a look here, you see what? We have a liquidity here. This guy is also a liquidity. This supply zone you're seeing here is also a what? A liquidity. You understand? And at times, there's what price does. I don't know whether this is still recording. Okay. This is still recording. Okay. At times, there's what price does. If you have a liquidity on a higher time frame than the one on the lower time frame, price tend to what? Take away the one on the lower time frame to respect the one on the what? On the higher time frame. So the concept of what? One, where the setup was formed, not just that you saw a pattern you jump into, where the setup was formed. Two, there was an imbalance. And three, the fact that what? There was a liquidity. So there was a whole lot of things that was going to make that trade not to what? Play out. If that setup was formed around this imbalance, it would have been what? You would have said, okay, let me now what? Let me now take the risk. It was worth taking. But the fact that where the setup was formed was what? A no. So that was why this step 200 trade didn't play out. And for this week, I'm waiting for price to get to here. That is, if price gets to here and give me a confirmation, gets to here, then I'm going to protect this. I'm waiting for price to get to here, then wait for confirmation. But I don't think price might have the energy to get here. But if price gives me what? A reason to start selling from here, I'm going to sell. But if price doesn't give me a reason to sell from there, I'll let it go and wait for another opportunity. So for more content like this, all you need to do is what? Subscribe to our YouTube channel, Trade with Cassie. We're also on Instagram, Trade with Cassie. And you can follow us on TikTok, Trade with Cassie. Thanks for watching. Have a wonderful day.